Listen up. The ultimate crypto debate at the moment is this: 4-year cycle or extended cycle ahead? This is the number one question, because getting this one right makes the difference in terms of cold, hard cash. Putting some of this stuff back in your bank account, okay? Now, we've been discussing this question a lot recently in the newsletter and in the Discord group, link down below, by the way. It's really worth doing very many in-depth videos on this topic. We've been exploring different angles, but we're gonna really take a big chart-focused angle on it today. And let's look at what we mean by the 4-year cycle and the extended cycle and why it's so important to get it all right. So look, let's dig into some of the data to see which of these two cycles we're more likely in right now. Of course, you know my thought, we're in extended cycle, but let's try and back that up with some charts. So what's the 4-year cycle? What's the extended cycle, technically speaking? Well, the 4-year cycle says the Bitcoin's price action is mostly a consequence of supply and demand dynamics around Bitcoin halvings. You know this, meaning the Bitcoin halvings basically cut the supply of newly mined Bitcoin entering into the market by half every 4 years. And a supply shock hits, which causes a parabolic run up about a year afterwards as markets adjust to the new reality of liquidity. A blow off top usually comes about at 1.5 years after the halving. The entire thing unwinds as Bitcoin dumps 70 to 80% after that. The problem is now we have Bitcoin ETFs. Now we have institutions buying, and the amount of Bitcoin entering from miners is now negligible by comparison to demand. After that big dump, of course, the next cycle bottom comes about a year after each blow off top. Then, of course, you get the next halving occur and the thing repeats again, a nice clean 4-year cycle. Well, we're in that phase right now. Over the next 3 months, we're going to prove whether or not we have hit the 4-year cycle exactly or not. The extended cycle acknowledges all that, says, yeah, that stuff's all great, but because each halving cuts Bitcoin's block words in half again, the halvings are substantially less impactful on Bitcoin's price action compared to the ones before. So therefore, the extended cycle says that's only a matter of time until other market forces have a greater impact on price than the halving, and at some point these forces break the 4-year cycle pattern. Again, ETFs, institutions, sovereigns buying, all that kind of stuff. Business cycle, we don't really top without the business cycle. Credit cycle, we don't really top until the credit cycle tops, all that kind of stuff. And that stuff's all ages away from topping at this moment. So why is it so important we get this question right? Because we're gonna make a lot of money if we do get it right. Shit tons of money, okay? For example, if the 4-year cycle is still correct, then you will want to make a full exit on the pump in Q4 and re-enter at the bottom of the next bear market somewhere near the end of 2026. Sounds very clean and simple, right? But if we're in a new extended cycle, then you'll want to rethink your plan because you won't want to sideline yourself. For example, making a full exit near the end of the year if only a small retracement hits, which you'd interpret as the start of an extended 80% correction, when in fact it's just a small retracement before ripping to new highs. Now, I fully think we get a major local peak at the end of Q4 and a retracement big enough to make everyone think it's over, but it won't be over. Theory remains to be proven, obviously, in reality. So, to put this all another way, you'll make more money by being in sync with the larger swings, timing, and the reality of this market, whatever that reality might be. And we don't know, we don't have a crystal ball here, but we can theorize about how things could play out. So let's turn to the data. What is it saying about which cycle we are likely in right now? Before we get to that data, guys, if you're trading this cryptocurrency market, you got to get yourselves a good exchange account to do that. That place is called BitUnix. I have a question for you. Will you actually move over to an exchange that actually respects your privacy and gives you insane bonuses to sign up and has super low fees? That place is BitUnix, okay? Long the rips, short the dips, available to anyone, anywhere. That's you. Seriously, check it out. Link down below. Right now, they're running an insane deposit bonus. Deposit $2,000 or more, and you'll get a $400 deposit bonus. Deposit $10,000 or more on your first deposit, and you'll get $700 cash back. There's insane trading bonuses, and we're giving away $1,000 in every live stream. All you have to do to be in to win the $1,000 live stream giveaway, use the link right down below, start your account, make a deposit, make one trade, you're in to win. Go check it out, link down below. Now, back to this data, the data. First, let's look at the post-halving cycle top timing. Here's Bitcoin's last 3 halvings measured to their respective cycle tops. It took Bitcoin exactly 524 days to top after the 2016 halving, 548 days to top after the 2020 halving, and the average of those two is around 536 days. And wouldn't you know it, Wednesday, October 8th, Bitcoin will be at 536 days post the 2024 halving. Meaning if we're talking precise historical averages, and if we're still in the 4-year cycle, then data suggests that we should top, this week. It's over. It's over. Sorry, guys. Hope you made some money. The next bear market should be starting this week, in theory. Crazy. Don't buy it. Don't buy it. Now, perhaps we just have a bit of extension. Things a bit longer. It's going to take 600 days this time, so maybe the top comes in December, January. okay? What this all says, though, is if we continue to get new all-time highs after this week, then that begins to build the case, of course, for the extended cycle. But really, I think we have Q4 as our time frame. If by December we've hit a major top, it's going to add a lot of fuel to the fire for a 4-year cycle theory. And if we hit any new tops in February, March, April next year's, it means that the 4-year cycle is done. And while the window might be relatively big, all of Q4 essentially, the more all-time highs we start getting out further from this week, the stronger the case becomes that the cycle could itself be extending. Now look, I 100% understand we're dealing with a tiny data set here. There's only been a few Bitcoin halvings and a few 4-year cycles, right? And make no mistake about it, we absolutely can still hit a new all-time high in late Q4 or early Q1 of 2026, and that larger 4-year cycle really remains intact. It's just this time took 575 days instead, right? So don't miss the core point here. And just to repeat, if it's this, if we're getting newer and newer all-time highs after this week, these will serve as small data points towards the extended cycle, not definitive proof. So keep your eye on this. It won't provide you with a certain answer until really sometime into later Q1 of 2026 or into Q2 of 2026. If we get new highs then yes, the 4-year cycle is dead definitively. We can't know in advance. Next point, this cycle's buyers are different from the previous ones. We already mentioned this, but look, institutional holdings of Bitcoin that we know overlaid against Bitcoin's price history. Check this out. So during the 2017 top, the institutions held just 387,000 Bitcoin. During the 2021 top, they held 1.3 million Bitcoin. Right now, they hold 3.8 million. So we know that the institutions are here in force and it's only growing. This data is further confirmed by wallets holding 100 BTC or more. So check this out. These wallets unloaded in the 2017 run-up. They held flat during the 2021 run-up. But look at what they're doing now. The number of these wallets has been on a damn 45-degree pump since late 2024, and it's still rising even though Bitcoin is over $120,000. In fact, last week we had like $3 billion almost of inflows just in Bitcoin ETF products, not even accounting for the digital treasury companies. Now, I'm pretty sure that a lot of these wallets here, by the way, are from the growing number of publicly traded companies that are now launching Bitcoin reserves. Likely, that's where this data is coming from. Now, contrast this institutional activity with retail activity. It's very interesting. See, right now, addresses holding more than 0.01 BTC or more than 0.1 BTC peaked with the 2017 and 2021 tops. But they've been declining this cycle since early 2024. Retail is simply not buying Bitcoin anymore. To their detriment, I think, but hey, it is what it is, man. It's similar with addresses holding more than 1 Bitcoin. They peaked out in the 2017 top, sold into the 2021 top, and they've been net sellers in this cycle since early 2024. So when you combine this institutional and retail data, it says that the players are different this cycle, and they have different ways of buying. We have trillions of dollars that'll be getting a just 2 to 5% allocation at any price because that's just what they do. This all indicates we're in a new extended cycle because the buyers are different. They have different strategies and different time frames, and they're still allocating. I think the institutions, by and large, do better versus retail at not buying the greed and selling the fear. They just buy and hold. Look at BlackRock Bitcoin ETFs. They largely just buy and hold. And if I'm right about this, then that suggests is slow upwards grinding price action from here throughout the end of this year and throughout the majority of 2026 until all markets roll over at the same time. Again, having said that, watch to see if retail FOMO enters into Bitcoin or crypto just more broadly this quarter or even into Q1 of 2026. Coinbase app rankings surging up and stuff like that will definitely at least mark a local peak, if not a peak for the cycle. If we see retail wallets make a hard, fast move within this time frame along with the price shooting up, that could point us to the 4-year cycle indeed being correct or just another local top coming in. Finally, we've got Bitcoin's historic volatility, which is shown on the chart with the blue line. Basically, this line measures Bitcoin's volatility and the changes in the rate of volatility. This is over Bitcoin's entire price history. Now, as you can see, volatility has been steadily falling since the 2017 peak, and it's at an all-time low right now, which is unbelievable, just as Bitcoin's at an all-time high. This tells us two very interesting things. First, it says that Bitcoin as an asset has matured. We're going through the maturation phase, the ETF phase, the institutional money phase. It's growing up. It's a big boy now. And it builds the case that institutions are more involved now, while retail is less involved. Second, it points to a new and extended cycle, because in the last 2 cycles, what did we get? We got spikes in volatility concurrent with the price tops, but that's not happening right now, as volatility is near historic lows. So there's another data point for the extended cycle. However, this is another important metric to watch, because if we see volatility spike in Q4 or Q1 along with the price, that might point us back to the 4-year cycle. So look, based on what I'm seeing, the data indicates that we are most likely in the midst of an extended cycle, and that a lot of people are probably going to end up selling too early. The next local top will catch a lot of people out. And I'm not saying you can't sell the next local top and rebuy the next local major bottom, swing bottom, right? We're talking multi-month thing here. Data can always change. Points back to the 4-year cycle. Something can happen. Absolutely crazy run. High cycle top indicator flashes. We're done. See you later. Keep tabs on some of the stuff we mentioned here. Pay attention to some of the other cycle top indicators. By the way, there's 30 cycle top indicators that are generally tracked, and not a single one has hit yet. Finally, understand that I don't have a particular dog in this fight, let's say. I just want to get it right because it will make a big difference in my personal profits. My ego is not attached to it. If we see the signals for a Q4 top, 4-year cycle remains undefeated, great. Sell that shit, man. If it looks like we still don't have any of the cycle top indicators that we should expect, that prices look like they still have a long way to run, then hey, maybe take profits on the local top in Q4, but be positioned for 2026, because everything that we're seeing, from the charts I've just shared to the business cycle, the credit cycle, and 50 other things we've discussed at length here on the channel through a different series of videos looking at different angles, different economic data, different macro data, different charts, gold, et cetera, et cetera, et cetera, all point to the same thing. We're going higher for longer. Maybe it's all wrong, but my bet is that that's going to be right. Thanks for watching.